Ethereum is navigating some serious turbulence, and the decisions traders make right now could be critical. The market just got hit by a massive geopolitical shock that triggered the largest liquidation event in crypto history. While some are calling this a buying opportunity, others are seeing it as a final warning sign. In this video, I'm going to cut through the noise, break down what just happened, and show you the key price levels that will tell us if this is a temporary dip or the start of a much deeper correction. Section 1. The Macro Mayhem. What just happened? Before we get to the charts, we need to talk about the chaos that just unfolded. The market was rocked by a massive, rapid decline, sparked by escalating geopolitical tensions. Specifically, renewed trade war fears after a surprise announcement of a 100% tariff on Chinese goods. This wasn't a slow bleed. It was a flash crash that sent the entire crypto market into a panic. This single event triggered the largest liquidation in crypto history, with over $19 billion in leveraged positions completely wiped out across the industry. To put that in perspective, this wasn't just a bad day, it was a historic deleveraging that affected an estimated 1.6 million traders. The fallout was brutal. Bitcoin plunged from its high above $125,000, briefly dipping below $103,000 before finding its footing. Ethereum dropped over 14% to around $3,742, while some altcoins like XRP were hit even harder, plunging more than 22%. Amid the carnage, Ethereum actually managed to bounce from its lows, with buyers stepping in around the $3,700–3,800 zone. But the big question on everyone's mind is, was that the bottom, or just a pause before the next leg down? The crash was fueled by a perfect storm of panic selling and a flight to safety, as investors dumped riskier assets like crypto. Even with institutional ETF inflows remaining surprisingly resilient, the market is on shaky ground. While some analysts see a buying opportunity, the charts are telling a more cautious story that we need to pay close attention to. Section 2. The evidence on the charts, a technical breakdown. All right, let's get straight to the charts, because this is where the real story unfolds. We'll start with the big picture on the daily chart. As you can see, Ethereum had been in a solid uptrend, but the recent crash caused a significant technical break. The price sliced through several support levels before finding its footing. The area around $4,000 to $4,200, which was previous support, is now acting as resistance. We're seeing the price struggle to reclaim this level with conviction. This is the first major hurdle. When a market bounces weakly after a massive drop and fails to reclaim a key area, it suggests that sellers are still active, looking to offload their positions into any sign of strength. The Relative Strength Index, RSI, a key momentum indicator, is also showing some bearish sentiment, reflecting fear in the market. Zooming into a shorter time frame, like the 4-hour chart, we can see a potential bearish consolidation pattern forming. Price action is getting tight, coiling between the recent lows and the overhead resistance. This suggests that pressure is building. Often, these patterns resolve to the downside, continuing the previous trend, which in this case was the crash. The key takeaway here is that the market's structure has been damaged. The strong, confident uptrend is gone, and the price is now fighting to hold above a fragile support level. Section 3. Conflicting forces, the bull trap versus the bear case. To make an informed decision, you have to look at both sides of the trade. The market is currently a battlefield between bullish and bearish forces, and this could easily set up a bull trap. On one hand, the bull case is still compelling. Institutional demand for crypto remains strong, with spot Bitcoin and Ethereum ETFs continuing to see significant inflows even during the recent sell-off. Some analysts are even more optimistic, with price predictions for Ethereum targeting $5,000 to $10,000 by the end of 2025, driven by network upgrades and growing adoption. These bulls see the recent crash as a healthy liquidity grab that flushed out over-leveraged traders, setting the stage for the next major rally. They're looking for a firm reclaim of the $4,200 level, to confirm a full recovery. However, the bearish arguments look far more immediate. The main fundamental pressure is the macro environment. The threat of an escalating trade war creates global uncertainty, which typically hurts high-risk assets. The recent crash showed just how tightly correlated crypto is to global market shocks. We're also seeing some signs of strain on-chain. While staking is a long-term positive for Ethereum, there's currently a significant queue of validators waiting to withdraw their ETH, which could introduce future sell-side pressure. When you weigh the evidence, the bullish case is banking on a quick market recovery and a return to the status quo. The bearish case, however, is supported by a broken technical structure and a very uncertain macroeconomic picture. The risk of this bounce being a bull trap, a temporary rally that lures in buyers before another sharp drop, is very high right now. Section 4. The trigger and the invalidation. Your actionable levels. This is the most important part of the video, where we define the exact price levels that will either confirm a deeper correction or invalidate this bearish outlook. First, the trigger. The final line in the sand for Ethereum bulls is the recent low set during the crash, right around the $3,700 level. A clean break and, more importantly, a daily candle close below this support zone would be the ultimate confirmation that sellers have taken control. This would signal that all the buyers who stepped in during the panic have been overwhelmed, opening the door for a rapid decline. The next logical area of major support wouldn't be until the $3,500 area, and below that, targets in the low 3,000s come back into play. Now, for this entire bearish analysis to be wrong, we need to see a decisive and powerful move from the bulls. The invalidation level is a firm reclaim of the $4,400 to $4,500 resistance area. I'm not talking about a quick spike above it. I mean a strong, confident push with a daily close above that zone. This would show that buyers have fully absorbed the selling pressure from the crash and are ready to drive the price toward higher targets, putting $5,000 and beyond back on the table. These are your battle lines. Below $3,700, the trap door could open. Above $4,500, the bulls are likely back in charge. The space in between is a danger zone, and the direction of the break will likely set the tone for the coming weeks. To summarize, Ethereum is walking on a knife's edge. The market was just shaken by a historic macro-driven crash that wiped out billions in liquidations and damaged the market's bullish structure. While Ethereum has bounced off its lows, the recovery looks fragile as it struggles to overcome key resistance. The charts are flashing warning signs of a potential bearish continuation, with the most critical support level to watch being the recent low around $3,700. A break below this level could be the final trigger for a much deeper correction, with targets well below current prices. On the other hand, if buyers can regain momentum and push the price back above $4,500, this bearish warning would be invalidated. But as it stands, the evidence calls for caution. The combination of a damaged technical trend and a tense global economic environment creates a very real risk for Ethereum holders. Be vigilant, watch these levels closely, and make sure you manage your risk. If you got value from this breakdown, do me a favor and hit that like button and subscribe to the channel for more no-nonsense market analysis. Now I want to hear from you. What are your targets for Ethereum? Do you think this was just a dip to buy, or are you preparing for more downside? Let me know in the comments below. Stay safe, and I'll see you in the next one.